This is how institutions use crypto without ever touching crypto. Okay, so another update. I swear, it seems like Ripple picks up a new partnership every week. Is that just me? I don't know. Anyhow, for this week's episode, a global payment company called Convera just partnered with Ripple to enable stablecoin-based cross-border payments. And this just deepens the infrastructure shift because the companies using this, well, they won't hold crypto. They won't see crypto. They won't even think about crypto because here's what's actually happening. Money will move like this. It'll go fiat to stablecoin to fiat. And that middle layer handles the settlement faster, cheaper, and with fewer intermediaries. We can call it a stablecoin sandwich if you want. But don't be mistaken, and don't forget, the technology isn't what actually moves the money. It's the liquidity that moves the money. The tech just routes it. So behind every transaction, there are really three liquidity players. First off, it is the banks. Yes, they still dominate major currency corridors and they hold the deposits. The second is the market makers, things like trading firms that provide 24/7 liquidity, especially in volatile or illiquid markets. And the last one is on-chain liquidity. So stablecoin pools and automated market makers that never close. So when Convera plugs into Ripple, they're not really replacing the system. They're tapping into multiple liquidity sources at once. And that there is the actual shift, going from one system to a network of systems. And if you're wondering where XRP fits into all this, well, it's not the main system. And it's not about replacing money. It's a liquidity tool. And when liquidity is deep, stablecoins, they probably work fine. But when liquidity breaks down, there's fragmentation, different currencies, bad FX spreads, or off-hours markets, well, that's where XRP can act as a bridge, right? USD, XRP, to the destination currency, whatever that is. And it happens in seconds. So XRP doesn't replace the system. It fixes the parts where the system doesn't work well. And in a multipolar world, does the demand go up for something like that? Or does it go down? And if you look at the big picture, cross-border payments are projected to reach $290 trillion by 2030. So the real question shouldn't be which crypto wins, but more so who controls the flow of liquidity across all of these systems. Because this is not about replacing banks. It's about rewiring how money moves underneath them. So let me know your thoughts in the comments. Follow if you want more.